The US dollar continues to weaken despite the threat of tariffs. Well, the dollar index hit its lowest level in 2025 overnight. Meanwhile, the Japanese yen broke below the 150 per dollar mark after core inflation in the country hit a 19-month peak. And the euro also strengthened. Key for currency traders this weekend, it's the election in Germany. Well, Francesco Pesole is FX strategist at ING. Francesco, what's the reason behind this dollar weakness we're seeing? Are traders just a bit sceptical that all this tariff talk from President Trump won't really amount to very much?
Yeah, so partly it is due to the fact that Trump seems to be more open to striking a deal with China on trade. And so markets are sort of having a bit of a rethink of whether the strategy, that the sort of protectionist strategist, is perhaps not much of a medium to long-term one, but more like a short-term transactional one. We don't really believe this will be the case. We still expect sort of a peak of protectionism risk in the FX space around the second quarter of this year. But this, at the moment, is definitely contributing to an unwinding of dollar shorts. And alongside that, there's also a general narrative that is emerging that US exceptionalism is losing a bit of steam. And we saw it in some pretty weak retail sales at the start of the week. The leading index also was weaker than expected, and we saw some earnings releases in the US that seemed to point to sort of worsening outlook on consumption.
Now, I mentioned in the introduction the yen, but it did slip back a bit after the governor of the Bank of Japan, Katsuo Ueda, eased worries about aggressive rate hikes. What's your take on his comments?
Yeah, so it's probably understandable that the Bank of Japan still wants to tread quite carefully with rate hikes. They're in no rush to really signal they will hike rates in one of the coming two meetings because markets may get ahead of themselves, and they still want to see a few extra pieces kind of falling into place, especially on the inflation side. But at the same time, as you mentioned, we saw those core inflation numbers overnight, again, pretty strong. I think there are all the indications, also based on what the Bank of Japan did in the past year, that they're going to continue hiking rates. We expect the next one in May. Markets are not fully pricing it in, and therefore we still see a strong yen in the crosses.
Well, let's turn to Europe now and the German elections. How do you think the result there could impact on the euro?
I think there's a high chance that this will be sort of a non-event for the euro. I think looking at the polls, we received pretty clear indications that sort of the CDU-CSU alliance should win the election, as in getting the highest number of votes and parliamentary seats. Then there will be a period for negotiations about a coalition. I think the big black swan risk for the euro is obviously the possibility that the far-right AfD ends up getting more votes than any other party. Looking at the polls, this seems to be relatively unlikely. But I think excluding that black swan risk, the margin for a big reaction by the euro is pretty small. The euro is trading on other more urgent sort of risks like tariffs, obviously, and the whole discussion about ending the war in Ukraine.
Now, quickly, what's your take on sterling? It did edge up after hotter than expected retail sales numbers. Do you see an upward trajectory going forward?
Not really. We're quite bearish on sterling at the moment. We still think that there's a lot of downside risks that will emerge in the next month or so, with the UK government having to tighten fiscal policy to meet the fiscal rule. And on top of that, we think that markets are still underpricing the chances of Bank of England rate cuts. So we think we might be pretty close to the peak in sterling against the dollar.
That was Francesco Pesole from ING. And don't forget, you can get more videos on Reuters.com.